Good morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 9th of January 2025. My name is Richard Lee and I manage the Stockradar.com.au website for you. Well, the winners are roaring after last year. They had some fantastic wins last year and we're very happy people, and the market started off well this year. So we just follow the market, follow the trends until they say no. So while they're still running on, we're going to jump on as many as we can because the market is in that type of mood at the moment where it's running a lot of stocks higher quite easily. So we're about finding the right ASX stocks for you today. As I said before, the ASX stocks, there's lots of good stocks in there. As far as why do I cover that market, there's plenty of room for me to make lots of money in that market. I don't need to move to other markets. There's some huge rallies in some of these stocks here, so I just stick to my knitting. This is what I do, this is what I follow, and the ASX stocks really are my specialty, and that's what I do. So hopefully we can find you some right stocks this year you can get onto. So feel free to come on, take a trial, subscribe, engage with us, what we're trying to do, and hopefully we can, as I say, find the right ASX stocks for you. Okay, let's get straight on to the top 10. And this is in fact the top 10 at the moment, the real top 10. Ansell is at the top, computer share doing really well. That's one of those explosive moves from a new high. QUB here, you can see QUB here. It's clearing away from resistance, leaving prices free to roam. So there's a big resistance level down there which it broke through, sinking to new highs, and it's just made a very strong advance since then. Everything looks good. The tendency rating is 10, so it's been a pretty good performer. Another new high, which has done well. We're going to look at Medibank Private at the moment. It's trying to rally at the moment. We'll have a look at that one because it's an interesting one. Orgs back near its highs, so is QBE. Seven Group's going gangbusters. Aristocrats going gangbusters. AMP's finding good support at the moment, and Breville Group is all going 10. So there's some nice stocks for you that are running at the moment, and as we lose some of these stocks, new ones come in, and that's the way it works. The process just keeps going on and on and on. So the top 10 at the moment are strong. We've actually lost two data items this week. I think it was one ETF and one stock, down 2 to 58 stock picks of 177 altogether. So again, that narrow band, but plenty of stocks for us to work with there. Okay, so that is. Well, now we can go to have a look at the overseas markets. And first up, we'll look at the Dow Jones. Okay, here we are. Well, not a lot of change in those ones, so we don't really need to spend a lot of time on their comeback. There's a support bubble below here. The Dow's probably the worst hit of all. It's still holding support at the moment, no real concern, just a correction and an up move. Bit of selling appearing, so the rewarding bell showing there, but nothing really has broken down there. While the other two indexes, the Nasdaq and the S&P, look fine. There's no real problem there. They're just going along pretty well indeed. A bit of volumes increase on the selling side of things, but it hasn't dented the price too much. Our market at the moment is going well. So far we've had a good week this week, making those moves in high highs and high lows. So we just continue to follow that higher, and the ASX 200 at the moment is in an uptrend. Okay, then we go to gold. Gold is holding pretty well at the moment. It's just a little bit of a sideways corrective pattern which we saw back here middle of last year, earlier this year. So it's having a bit of a corrective pattern. Nothing's broken down as yet. Copper, it's rebounding off its support level there. Again, we're in this little wishy-washy area. Not too sure what's going on, but the big picture's bullish. So copper, it's a bit of a hard one to call while it's in this sort of range. It's jumping a bit around all over the place. We want to see it break out of this pattern before we get excited about anything there on copper. Okay, Brent crude's also bounced off support, so big deal. That's done that a few times. There's a bit of volume there, light volume there, but nothing really to get excited about on the upside still for crude. So that's what they're looking like in the overseas markets. Now we can go to some of our stocks. Last week we looked at some good stocks, Qantas, Coles, WOW, and some of those health stocks as well, which are all looking fairly interesting at the moment, especially the big ones. This week we're going to look at a few stocks here, a couple of trending stocks looking pretty good, a couple of opportunities, an interesting new high trend reversal, and also we'll have a little review of Paragon Care, which we looked at last week, which is quite an interesting little stock. Anyway, first off we'll go to Suncorp. It's just been trending higher nicely. It's a developing trend here. We built a developing trend here. It found resistance here. This was triggered a new high here, which was bought, and it's just been trending up nicely ever since. Trend intensity rating is +8 as of last week. No real problem there. Volume really is okay. Momentum's great, and moving average is fine. So again, where these trends end, we don't know. But for the moment, it says stay with the trend, which is what we'll do. Medibank Private's an interesting one because this has chopped sideways for a while since our entry. And there's probably two schools of thought here. One is I'm going to get frustrated, I'm just going to chop out at no loss and stand aside, which is quite a reasonable thing to do. Or in my case, I just follow my rules, which is really if my stop doesn't go off, I hang on. So I'm still in there at the moment, and Medibank Private is trying to make a little bit of a move higher. If we look at the long-term picture on Medibank Private, it's got this big triangular tape pattern, which is broken out of, but it hasn't really gone on. So it's been a bit disappointing really, but I'm stuck in the middle of a situation where it hasn't gone on and it's above my stop, so not much I can do really. But so as I said before, if you decide this situations are too much and you're better off going somewhere else, then that's fine, chop out, don't take any loss and just move on. But Medibank Private still is looking okay to me. It's not coming down, so I'm still holding in there. There's highs up here at $394 is the main area. It's coming back down to 360. So that's your trading range there. Volume has been a bit mixed. Momentum is just above neutral, so it's holding okay without going anywhere. So a bit of a frustration there, but that's what Medibank Private's doing at the moment. So we can sort of just be a bit patient with that one. That's what we do. So. Okay, the next one I want to look at is Brambles. Well, it's a bit about patience sometimes. Medibank Private's a good example of it, but also with Brambles. It took a slow ride to get through this big resistance level that it had many years ago, which was a long-term resistance level, which it did break out of. Chopped about a bit quite wildly, but then we made a really nice new high up here back in September, and it's been quite strong move since then, and it's making new highs again this week. So Brambles is an interesting one. The story wasn't good for a while, but it seems to be getting things in order these days, and the investors are liking it, and it's moving higher. And it's in a trend, so we hold it, and we raise our stop. Simple. Okay, couple of opportunities here. Well, I think EBOS Group, which is in the health sector, I was sitting here looking at this chart for a while, and I was watching this area here where it just keeps banging on the door, but it can't get through. Looking at a chart is really quite a simple thing. You can see it whether the stock's going up, down, or sideways. So you don't really need to look into the detail too much of this here. So I see this low point here. I see the support coming through here, which is very, very strong, and we've got this resistance, which is also strong. So we're getting put into a corner here. So that's just really what the price action is telling me. The trend intensity rating is 0, which is neutral, which is a good thing. So I can certainly quickly switch into positive mode if it moves above R1. So really just a matter of watching, being patient with these ones, and when the trigger is fired, then we move. Okay, so EBOS Group is something worth watching at the moment. AGL Energy, I have talked a little bit about this before, but again, another stock that's just not coming down, and I like that sort of sign. I like this sort of up slanting buying that's going on here, which means there's a bit of resilience here, a bit of buying support, and all we need to do is get it back through R1. We don't have to do anything until that happens. For the moment, we'll just wait and watch and see what happens, but I am getting good signs of strength here. When I hit this sort of point here, you often look for it to come back to S1. Hasn't done that, so the likelihood is that the stock market, which continues to go higher all the time, is going to take AGL higher with it above R1. So that's what we're looking at in AGL. Its trend intensity rating is +1, so it's cocked and ready to fire as well. Another resilient stock, solid support prevailing. It's just had all this hoo-ha about Richard White and his personal business and stuff, and he's gone, and the share price really hasn't done much at all. It chopped about a bit nervously, but the buyers have come in here pretty quick and snapped up any weakness. So I'm not too concerned about what's happened back here. I'm really more concerned about what's happening here at the moment. We get stopped out. We're just waiting for this. It's showing good resilience. So for those who are WiseTech followers, I quite like the look of this. But I really need to see it above R1, which is quite a good little resistance level for the moment. Okay, trend intensity rating, again, is in that 0 space, which is where we like it. Okay, so that's the stocks I've got for today. You've got lots more interesting stocks hitting on our radar. what we do is we help you find trends, with our new highs, trend reverses, and we show you where to set our stops. All this sort of stuff is in the trading center for you just to follow. So you can take a try and have a good look at that if you want to. Just talking a bit about charts before, I think when I look at a chart, it doesn't take me very long to get a quick idea of whether it's going up or down or what the probabilities are of it doing that. So we can spend a lot of time looking at charts, but probably it's not going to tell us a lot different. But what we do is we rearrange things in our mind. So we look at charts for long enough and think, well, maybe I can make up a story that suits my bias or suits my feeling, and subconsciously we're doing that. So I just find if I spend too long looking at a chart, it's I sort of get that sort of point where I'm looking for things that perhaps aren't there, because very quickly I can see from a price chart what it's doing and what the probabilities are it's likely to do. So so this just leads me onto my slides basically. Just a quick review today. Really what I spend my time doing, well, being patient is one thing. What I'm talking about, there's a few stocks I'm talking about, and also nothing. Nothing is time spent away doing other things. So I'm just being patient throughout my signals, looking at all my stories, looking at the charts. I don't spend hours looking at charts. I have my rules. I have my signals that tell me what to do, and it's fairly straightforward. So a lot of my time is just being patient, just waiting for things to happen, for signals to go. And just be doing nothing for the rest of the time. Okay, so for the most part, doing nothing is best. We always feel we have a need to do something, but we don't have to. We just review once a week and go away and take our mind off it a bit. So what I'm talking about is stocks like Brambles, IAG, CBA, a lot of these stocks. All you do is just let it happen and raise the stop when you can, and that's simply how you manage a trend. So it's not really a matter of It's a matter of clear thinking, not using your bias or your feelings, but seeing what's there and acting appropriately. Okay? So trading is also about managing expectations. Within this whole sphere, we have a thing called what we expect to happen. We all love to make lots of money, but it's not necessarily true. And the reality is that the stock market is it's hard to make money unless we're smart about it. If we're smart about it, it's easier. So trading is really about matching expectations with reality, with what I can really achieve. Okay, when I'm trading the stock market, keeping our mind in good shape is important. So not letting things like disappointments and stuff affect ourselves too much, which can depress you. Keeping our mind in good shape, so our expectations are always got to match reality. Then we're not going to have so many weaknesses or so many depressing moments. We didn't get that price. So keeping our mind in good shape is important. There's no need to clutter things with overly optimistic expectations, okay? And sometimes that happens, especially when stocks run hard. People have all sorts of expectations or targets, and which is probably pretty ridiculous really in the end. So just be careful, because disappointments can be devastating, and we don't want to be in that sort of space. We want to keep a clear head and be able to act appropriately. Okay, so that's just a little bit of word of wisdom for you through here. The newsletter will be out later on this month. I'll start updating the blog, which I have done already this week. You can take a try, as I said before, and go and look at the Trading Centre and back copies of the newsletters. Okay, so really today is just about trying to look at things fairly simply. So finding the right stocks consistently requires a process-driven approach. But once you're set up in stock prices, from there, once your stocks are set up, your price will follow. Your stock mix will follow. And trade management takes over to automate your process. Then you have a plan. So it's really just that process-driven thing. It triggers the signals. You manage it with your risk management, and you let things flow from there. And that really is a plan of action. And that's all you really need to do. So as I say before, keep it simple. Watch your trends, heed your stops, have fun, and most of all, stay safe. And I'll see you all next week, hopefully with a few more words of wisdom. Okay, thanks very much. Bye now.